Are you one of those people that struggle with understanding what cost of goods are? Well, today we're going to break it down and help it become as simple as possible so you never again have to struggle with what cost of goods are. Hey, badass business owners, my name is Tammy and I'm here to help you grow your business, but more importantly, grow those profits. So what we're going to do right now is we're going to take a look at what cost of goods sold are and what every small business owner needs to know. Now, here's what you can expect by the time we're done with the videos. We're going to talk about what are cost of goods and what isn't, because a lot of people get them confused. We're going to talk about why they're important. We're going to talk about a common mistake that I see that is costing people lots of profits. You're definitely not going to want to miss that piece right there. And we're also going to see how do you find them on your profit and loss statement, because a lot of times people are like, where are they? I don't see any on mine. There's probably a reason. Now, what are cost of goods sold? Well, it's really simple. Cost of goods are any products, materials, ingredients, or labor that is used to produce the product or to provide a service. So basically, if you use it to give to somebody or it's used in the process of giving them that product or service, you're going to count it. We're going to go over some examples to make this a little easier because sometimes this can get confusing for some folks. Now, let's take our first example as a bicycle. Let's say that you sell bicycles, but you buy them as a bicycle already assembled. So it's a pre-assembled bicycle. Well, that cost of that is $100 for you as a cost of goods. There's no labor involved because all you're doing is taking it off of a truck and then you're turning around and selling it to somebody else. There is no labor involved. But what does labor look like when you do include it in your cost of goods? Well, let's say you get all the parts for the bicycle, but you still sell the client a full-fledged bicycle. So now you have labor to assemble that bicycle before you can sell it. So if I'm just selling the straight bicycle to bicycle, no labor. But if I have to assemble the bicycle, put it together before I can sell it, now I have labor costs. So in this case, the parts might cost me $60, but the labor to put the bike together is another $30. Now my cost of goods for this product is $90. So think of it as the pieces. It's one piece when I get the full bike. It's multiple pieces when I get it assembled, unassembled, and then obviously I've got the charge to put it together. So labor costs if I have to put it together. Same thing if candles. If I buy a candle, sell a candle, it's just the candle. If I have to buy the products to make my own candles, now I've got labor cost associated. Let's take a look at a service. Let's say you install water heaters. Well, you have the parts, right? You've got the water heater and then the supply lines and the different stuff, but then somebody has to install it. The water heater doesn't install itself. People are paying you to put in a new water heater. So now I must include the labor associated with installing that water heater. So in this case, the parts might come to $700, but my labor costs are $50 for the person I have to pay to put that water heater in. Now, even if you have a small service-based business where there's not a lot of costs, you still are going to have some costs. It might be, for example, if I wash windows, I might have some chemicals and stuff like that. Same thing if I'm in a maid service or a house cleaning service, I might have very low parts or ingredients or materials, but my labor cost is the biggest part of it, because if I'm going to wash windows, I might charge $20 an hour. Labor costs put in my, not necessarily to the client, but in my labor costs. And if I happen to clean houses, I might have 4 hours of labor depending upon how long I have to do it. Now, some common things that people ask about is, what about packaging, shipping, and fees? Well, in most cases, these are probably going to be part of your cost of goods, because if I send you something and there's packaging involved, or if I give you something and there's packaging involved, you're going to want to include that in your cost of goods because I'm giving it to the client. I used to have an ice cream shop, right? So if they put it in a cup and a bag and a lid and all that other stuff, they were getting all of that. That's packaging. That is part of my cost of goods. So yeah, a lot of times packaging is going to be part of that cost of goods. It's, bubble wrap, things that you might use. Shipping, if you have to ship it to them, if I've sold those bicycles and I ship them to you, there's going to be some cost of goods involved in that because I can't get you that product without doing that. So it is also a cost of goods. Fees, if you sell on like eBay, PayPal and all that, absolutely, you can count that as fees. Some people don't. They put it under expenses, but there's also a lot of people that put it under cost of goods. Not going to be mad at you either way that you choose to go, but since it is part of that whole process, a lot of times people will count fees. Well, so the next part would be What about the tools that you use? Now, this gets a little bit more tricky. If I use a tool and I give it to the client, then it can be part of cost of goods. But in most cases, I take my tools back. When I wash those windows, I don't give them the squeegee. I take the squeegee back. It is one of my supplies that I use. So in most cases, no, your tools are not cost of goods. Like I said, it's only if you end up giving it to the client. So if it's something that's part of the service or the product that you give them and you give them the tool, then yeah, that's fine. If they're throwaway, like you're not going to use them anymore, it's part of assembling and putting it together, then you can build a case that yes, that is a cost of goods. But in most cases, if you're taking it back, it's not. But if it's once and done and you use it and you throw it away, then it's going to be part of cost of goods. Now, what about other people? Some people will try to build a case for cashiers or office staff. Office staff, no, that's definitely operational. Cashiers, they are also operational. Now, I know what you're thinking is, well, I can't sell it to them if I don't have a cashier. I understand that, but that is just part of your business operations, and you have to have a cashier to be able to do that. So no, the cashier does not count as a cost of goods. Cashier counts as an operational person. Mileage, I've seen people debate this one left and right. You can say it's an expense. You can say that it's a cost of goods. If mileage is a big part of what it is that you do, it might be smart for you to include that mileage to see if it even makes sense for you to do the job, or if you're paying enough. I mean, if you're doing a job 2 hours away, then you probably need to count the gas or the mileage or whatever you're going to have to do to be able to go out there. But in most cases, mileage is not a cost of goods. But if I'm a truck driver, for example, mileage is a huge part of it, and it's going to cost me a lot. And I definitely have to include that gas and that mileage in there to be able to do it right. So mileage, you can build a case for either way, but for most people, it is not, unless it's a very highly intensive mileage piece of the cost that you're going to experience. Materials that you provide them, I touched on this a little bit earlier. So basically, if it's something you give them, it's going to be. Now, let's just say you have a coaching business, or you have another type of service business where you really don't give people anything, or there's really just your labor involved. Yes, you definitely want to include your labor. But if you give them like a welcoming box with gifts and stuff like that, you can put that in your cost of goods. But there are some businesses out there that do not have any cost of goods. So it is perfectly normal for that as well. Now, the main thing I want to tell you is check with your CPA if you question anything from a tax standpoint. But ultimately, your P&L is your tool to understand what you're spending money on. Just because you put it in a certain place on your P&L doesn't mean that's where the tax professional is going to do with it. There's a lot of people that claim every kind of meal as a tax, as a cost of, I take this person out, I take this person out. So they try to put it as an expense. But the tax person is going to tell you, no, you can't claim that as taxes, or no, you can't do that. But yet it's still on your P&L. Just keep in mind that your tax professional is the one that'll let you know if it's taxable. They're two totally different things. You're not going to get in trouble for putting something under cost of goods versus expenses. It's going to be put into the right category when it comes to taxes. You're doing it so you can better understand what are those costs associated. And that's kind of why we're going to talk about why it's important for you to understand what are cost of goods, because cost of goods help you determine your initial profits prior to operational expenses and profit. It's the first line of defense. If I know I'm going to turn around and sell something, then I need to know what is it going to cost me to sell them that thing. So whatever it is. So let me grab a pen really quick. If I'm going to sell this pen, I need to know that this pen is $1. So my cost of goods is $1. Now, if I have to assemble this pen, and I'm going to have another $10 worth of labor, then I know this pen's cost of goods are $11. Now, I still, after when I price it, then I know that my pricing has to be able to offset any operational costs that I have and any profit that I want to make. So your cost of goods are important because it's like the pre-profit, if you will, before you spend any other money in your business or even attempt to make a profit in that business. A lot of people will do markups, or they'll use some kind of margin system, whatever it is, to price. I've got other videos when it comes to pricing, but you want to make sure that you understand all the costs that are associated with you to make or provide that product or service that you're doing. It's those minimum costs that you need to make sure that you understand. That's why cost of goods are important. Now, this is what people are using to make the decision on what they're going to charge. I just touched on that, because if I know that my parts are $40 and my labor is $20, then I can go, okay, that's $60. I want to charge $100. It's that initial thing. Now, whether it's the right price or not, that's something totally different. But usually people are using those cost of goods to set the original price of their product or service, because ultimately, it's going to come down to, am I going to be able to make enough money once I put in my expenses and the profit that I want to try to get? Once again, different video, cost of goods. We're just trying to say what is the minimum amount of money that I'm going to need to be able to provide this product or service. Now, a common mistake that I see, and this is really important, I've touched a little bit on it, but solo business owners are not including their labor in their cost of goods. Usually it's the solo persons that are doing it on their own that are making this mistake a lot. And in some cases, they're making it even if they have employees. But you must include your labor, because if you're the one assembling that bicycle, there is labor involved. But what happens is they just go, well, the bike costs me $60 and I'm going to turn around and I'm going to sell it for $80, and now I've made a good profit, a $20 profit. No, you didn't, because you, the person, the business owner, still has to be paid if you are a part of cost of goods. You wear two hats in your business. One is the employee doing the work, and the other hat is the business owner. The business owner gets paid if your business is profitable. The employee you needs to be paid for the labor hours that you are part of those cost of goods. Now, they're all going to be owner's draw. You're pulling the money out the same way, but it helps your pricing. It makes sure that you're priced correctly. It's going to make sure that you get a true cost of goods. And the only way you can do that is you must include a fair wage for any employee labor work that you do. If you're the one installing those water heaters, you need to have labor hours. If you're the one washing those windows, there needs to be labor hours. If you're the one assembling the bike, there needs to be labor hours. And you need to know that, hey, I put in 30 hours of work at a fair wage of $20 an hour, $25 an hour. That is your labor hours for being an employee in your business. And by including that in your cost of goods, you're going to make sure that you can set a price that not only pays you as the employee, but now you can say, am I marking it up enough to be able to cover my operational expenses and to make sure I still have a profit that I can take as a business owner? Because remember, your profits go to three things. Your profits are going to your taxes, going to retained earnings, putting it back into the business, and then to pay you as an owner. So if at the end of the day, you don't include yourself in those cost of goods, what's happening is you're pulling out money for you because you want to make $3,000, $4,000, whatever that amount is, and you're not making sure that you're profitable. That's why you don't have any money at the end of the day, because you never made sure those labor hours of work time were included in your cost of goods so you could price it correctly in the first place. Now, here's a couple things that you need to keep in mind about how is it that I'm going to pay myself, right? Well, it depends upon how your business is set up. If you're a solo single member LLC, like I said, you're still going to have an owner's draw. There's just two different ones. You might pull your first part of money out and you want to capture that as your labor hours and say, okay, I'm going to pay myself. My labor hours came out to $3,000. I'm going to make sure I get $3,000 from that. And then you're going to see if the business is profitable. And then you can go, oh, wow, cool. I made another $3,000. I'm going to put $1,000 away for taxes. I'm going to put another $1,000 to put back into the business. And I'm going to pull out as the business owner another $1,000. So when you're a solo single member LLC, you're just kind of thinking of those paydays as two different ways, one for your employee work and one for your business owner. And, just remember, you're being taxed on all of it because you're not on an actual payroll as a single member. So it's important that you keep in mind that any money that you pull out, whether it's as a employee or as a business owner, you're going to be taxed on the entire thing. Now, if you happen to have a C Corp or an S Corp, you already have a payroll and you're already on the payroll, in which case you are just going to do your normal payroll that you do. You just want to classify it as employee time if that's exactly what it is. And then you'll have your distributions that you take at the end of the day with your business. Now, an important piece to keep in mind, make sure that when you are pricing that you include that employee labor like you would any employee. I've been saying it. I'm going to keep saying it. It's really important that you keep in mind. Now, one other thing that I promised you is we would take a look at your cost of goods and your profit and loss statement. I encourage all of you to have good bookkeeping, right? Whether you do it or you hire someone to do bookkeeping. I recently started a bookkeeping business, but the important thing is, and the reason I did that is because most of you guys have terrible bookkeeping. You're not doing it at all. It's important that you have a good P&L. And here's some of the reason why. Here's a P&L, and here's where it says cost of goods. And what you're going to see here is there's lines on here for the wages, for the labor, and you're going to see material costs. And in this particular business, they have subcontractors as well. But you're going to see both of those in there. You're going to see the fact that those materials and ingredients that they use are in there. And you're going to see that the labor hours to provide the service are in there as well. And then earlier, remember I was telling you, because you're going to set your sales price up at the income side. And then what you're going to have is you're going to have those cost of goods. And when you subtract those, that's how you come down to what's called gross profit. Profit before your operational expenses and any money that you take out or any profit that the business has. So your cost of goods are important because it really sets the tone for what your gross profit is prior to all those other things. And once again, here's where that line for gross profit kind of carries down. Then you take off your expenses, and then ultimately you're going to have your profits. Now, why is all this important? Remember, it helps you price correctly. It's going to make sure that you have a profitable business at the end of the day. It's the most important piece of the entire thing. Now, if you want to learn more about this, there's other ways that you can get it. You can watch other videos I have here on the channel. I have a very affordable class course in the show notes that talks about knowing your business numbers, and it's going to walk you through really simplistically and teaches you how all those work and what they look like and how they look on a P&L, all of that good stuff. So you want to check that out. And like I said, if you're looking for some bookkeeping, there's also a link down there for that as well. But listen, cost of goods are an amazing thing for you. It's really going to help you price really well and help ensure that you have a profitable business. With that, go watch some of these other videos on pricing and whatnot. And remember, keep learning those business numbers. Is going to make you the most profitable business owner that you can be. I'll talk to you next time. Bye for now.